The National Procurement Act (NPA) was enacted in 2018 and became operational on 28 November 2018. The National Procurement Commission (NPC) was established under Section 8 of NPA and became operational on 1 April 2019. This act was then amended on 13 September 2021. Section 9 of the NPA outlines the functions of the Commission, that the Commission shall undertake procurement on behalf of the state, including public and statutory bodies. Section 28B, 28I, and 28O of NPA establish provincial, districts, and special procurement committees of the board to procure works, goods, and services within their threshold levels specified in Section 26 of NPA. What is procurement? Procurement is a process undertaken by the government to obtain works, goods, or services. It includes all purchases, whether very small, minor, or major. The procurement process used is determined by the value in kina, and it is a legal requirement by the National Procurement Act (NPA) amended, Public Finance Management Act (PFMA), Financial Instructions (FI), and Procurement Instructions (PI). Step 1: Project Identification and Documentation. Project identification and documentation is the first stage where all the procuring agencies who intend to do procurement must identify projects and prepare project documentation in compliance with Section 49 of NPA Statements of Requirements. Objective: to ensure proper documentation required for the project is prepared and made available before requesting a tender from NPC or the procurement committees to commence procurement. Procuring agencies, public or statutory bodies that intend to do procurement for projects above 1 million kina are required to engage the National Procurement Commission (NPC) or procurement committees (PC) to carry out procurement for projects they must prepare. Planning stage: allocation of the project site, costing of the project, and preparation of documentations. Step 2: funding source. Before commencing any procurement, there must be funds available. Funding for projects comes from various sources, such as the government of PNG through budget appropriation, internal revenue, donor agencies, loans, and other sources. Objective: to ensure that funding for the project is available NPA Section 25(8) to fund the project, and to avoid committing the state to any liability. Identification of funding sources. Before commencing any procurement by the Commission or procurement committees, there must be evidence of the availability of funding. There are two common funding sources. 1. The government of Papua New Guinea (PNG) funded and internally raised funds in a trust. 2. Donor international treaty, international agreement, international grant or loan funded. For government of PNG funded projects, established provinces, districts, and special procurement committees, a copy of a letter from the respective finance managers must be attached or provided. For agencies, a copy of Certificate to Commence Procurement, obtained from the Authority to Pre-Commit Committee Secretariat at the Department of Finance, must be attached. For donor-funded or loan-funded projects, under international agreements or loan agreements, a copy of a letter of no objection from the financier must be attached. These are done in compliance with Sections 25, 27, and 28 of NPA and Sections 39 and 40 of the amended PFMA. A Certificate to Commence Procurement or an APC Form 5A, letter of no objection, or a letter from the finance manager confirming availability of funding. Step 3: Standard tender documents. The Office of State Solicitor legally clears standard tender documents, which the Commission and procurement committees use. These documents are called Request for Tender RFT and Request for Proposals RFP, etc., which contain specific requirements and instructions to bidders. There are various types of tender documents under works, goods, services, consultancy, disposal of state assets, and certificate of inexpediency. Objective: to guide, provide information and instructions to procurement officers, procuring agencies, and bidders to use the appropriate standard tender documents for any project. In public procurement, there are generally 9 types of standard tender documents. Very small works, minor works, major works, goods, plant and equipments, services, consultancy, disposal of state assets. Certificate of Inexpediency Form 1 and Form 2. Step 4. Compliance checks on the draft tender documents. Compliance check is done on the first 3 steps: project documentation, source of funding, and all tender documents or request for tender prepared by the procuring agencies. Objective: to ensure that the procurement from steps 1, 2, and 3 are complied with to commence procurement. Statutory requirements. Standard tender documents are used to meet Section 51, requirements of NPA tender document transparency. Steps 1, 2, and 3 are done by the procuring agency and vetted by the Commission for compliance. Step 5. Tender number and the procurement methods. A tender number is a unique number issued to a specific project from the tender number registry. There must be a tender number registry. All tenders must be properly identified with a unique tender number. After the compliance check, if the requirements in steps 1, 2, and 3 are met, a new tender number is issued and registered in the registry. Tender number must be issued as either open bidding, certificate of inexpediency, or DSA depending on the type of tender. Note: tender number must be used as a reference to every correspondence relating to a particular project. Objective: to ensure that each tender is identified properly using a unique tender number for tender identification and proper record keeping and retrieval purposes. Step 6. Tender advertisement. All tenders must be publicly advertised through widely circulated newspapers, Post Courier and the National in PNG, or other electronic advertisements to promote fair and transparent competition. Objective: to ensure all tenders are publicly advertised to promote fair competition. Process involved. Tender advertisement notice. Tender advertisement requirements. Bid validity periods. Tender document fee. Document availability, tender closing and opening. Contact details. Pre-bid meeting date, endorsements. Instructions to bidders. Retender. Step 7. Issuing of tender documents. Tender documents are issued to interested bidders only after tenders are publicly advertised and upon purchase of the tender document. The NPC or the Procurement Committee officer responsible issues a new tender document, RFT, specifically for that particular tender. Objective: to ensure potential bidders are issued tender documents upon payment to the NPC or the procurement committees. Step 8. Closing and opening of tender. All public tenders must have a public tender closing and opening date and time. Tender bid documents must be delivered to NPC or the procurement committee for tender opening, as per the tender advertisement notice. Objective: to ensure that bid documents are delivered by bidders before the tender closing date, or at the tender closing date for tender opening. Step 9. Second compliance checks. After all tender opening, all the bid submissions must go through a second compliance check for the statutory requirements in Sections 48, 50, and 58 of the National Procurement Act 2018 and amended 2021. Objective: to ensure bid submissions comply with NPA statutory requirements. The second compliance check is done straight after the tender opening by the authorized compliance officer to check for the following requirements. National Content Section 48 of NPA. Industrial Standards Section 50 of NPA. IPA Certificate/Company Extract Section 58 of NPA. Tax Compliance IRCC OC Copy Section 58 of NPA. Social Security Obligation NASFund, Nambawan Super or Insurance Section 58 of NPA. Section 58 of NPA Bid Security. A compliance checklist is ticked off for every single bid submission. The checklist is then signed by a representative of the bidding company, confirming attachments of the statutory requirements during the tender opening. During the tender opening, no late submissions of statutory requirements will be accepted. It is the responsibility of the bidders to attach all the statutory requirements to their bid submissions and submit them before the closing date. Compliance officers must be transparent in carrying out their checks independently and not compromise with the bidders. Step 10. Technical and financial evaluation. The technical and financial evaluation is a process where the Technical and Financial Evaluation Committee TFEC members meet to assess, screen, and evaluate tender bid submissions using set criteria outlined in the bid documents or RFT. The TFEC members are appointed from experienced technical officers from stakeholder government agencies. There are three stages in the evaluation process: preliminary evaluation, detailed evaluation, technical and financial, and value for money ranking. Objective: to ensure that all bids are independently, fairly, transparently, and accurately evaluated, to recommend the most conforming and responsive bidders that can achieve value for money. Why evaluations? Evaluation is carried out to determine which bidder is compliant with the RFT, advertisement notice, NPA, and also more responsive with the technical and financial capacity to meet the requirements to complete the project. Appointment of TFEC Section 29. For each procurement undertaken by the Commission/Procurement Committee, the Board/Procurement Committee shall formally constitute a TFEC made up of respective members. Membership Composition Section 31. The technical and financial evaluation process is carried out by the Evaluation Committee members as listed below. TFEC membership for NPC Section 31(1)(a). Procuring Agency Chairperson. Procurement Officer NPC, Lawyer Office of the State Solicitor. Accountant Department of Finance. Technical and Financial Expert, Step 11 NPC Board or Procurement Committee Board Deliberation. The NPC Board or Procurement Committee deliberates on the TFEC recommendations for all procurement. The Board or Procurement Committees either approve, defer, or reject minor procurements that fall within their thresholds. The NPC Board endorses major procurement for contract values above 10 million kina to NEC for consideration. Objective: to ensure that the NPC Board or the Procurement Committees deliberate on TFEC recommendations for approval, deferral, rejection, or endorsement to the NEC. Board Membership and Composition Section 13(1). Secretary for the Department of Finance. Secretary for the Department of Works and Highways. State Solicitor. One representative of the Institute of Engineers, Papua New Guinea, one representative of the accounting profession. Step 12 Preparation of Draft Contract Agreement. The procuring agency, NPC, or the Procurement Committee prepares a draft contract agreement for legal clearance, and when cleared by the State Solicitor, proceeds to contract signing by the Chairperson of NPC Board or the Chairperson of the Procurement Committee and the Managing Director or a representative of the successful bidder, and is witnessed by the procuring agency head or a representative. Objective: to ensure that a contract agreement with the requirements is prepared for contract signing. Step 13 Legal Clearance for Minor Procurement. Legal clearance for approved tenders. The NPC or the procuring agency seeks legal clearance from the Office of the State Solicitor after the NPC Board or the Procurement Committee awards the contract to the successful bidder. Legal clearance is a legal advice issued by the State Solicitor confirming compliance with mandatory requirements, procurement process, and other relevant laws that all procuring documents are legally executed to execute the contract agreement. Objective: to ensure that all minor contracts are executed or signed in compliance with relevant laws. Legal clearance for approved tenders is requested from the Office of the State Solicitor on all minor procurements valued from 1 million kina to 10 million kina. Statutory requirements. Those that are applied in any procurement under Sections 70 and 71 are as follows. Legal clearance for approved tenders from the Office of the State Solicitor, minor contract. Attachments for legal clearance, minor contract. Seeking legal clearance from the State Solicitor. State Solicitor clears all contracts. Note: provinces, districts, and special procurement committees will have to liaise with the Office of State Solicitor in Port Moresby to obtain legal clearance, as they are not established in provincial or district centers. Step 14 Minor Contract Execution. Minor contract execution is the formal signing of the contract valued at 10 million kina and below. The contract is signed by the Managing Director or his delegate of the successful bidder, Chairperson of NPC Board or Procurement Committees, and the procuring agency head once the legal clearance is obtained from the Office of the State Solicitor. Objective: to ensure that the minor contract agreement is executed within the minor procurement threshold limit. There are two types of minor contract agreements. 1. Minor contract agreements under open bidding or public tendered project, or contract agreements prepared for projects procured using open bidding or public tender. 2. Minor contract agreements under COI tendered project. Contract agreements prepared for projects procured using Certificate of Inexpediency. Note, both minor contract agreement under open or public tender and Certificate of Inexpediency (COI) are executed between the following authorities: NPC or Procurement Committee's chairperson, managing director or his or her delegate of the successful contractor, and witnessed by the procuring agency head. For further clarification on the mandatory requirements of contracts, refer to Sections 70, 71, and 72 of the National Procurement Act Amendment 2021. 1. Open bidding or public tender is a procurement method used to invite the general public, who has the capacity to participate in the PNG or donor-funded projects. It is a procurement method that requires total compliance with procurement steps and procedures. 2. Minor contracts under Certificate of Inexpediency (COI) is a procurement method used to fast-track procurement process. COI is granted only in the event of an emergency declared by the head of state (GG), upon advice from the NEC created by civil disturbance, natural disaster, health emergency, or matters relating to national security or defense emergency. COI Form 1 is the application to request COI, and it is signed by the NPC CEO and the procuring agency head. COI Form 2 is the approval for the COI request, and it is signed by the NPC chairman and the finance minister. Step 15. Legal correctness. After the NPC board endorses and recommends the shortlisted bidders, the first phase of the NEC process commences. The first phase is implemented by the procuring agency, or NPC. The NEC policy submission is prepared to request legal correctness from the Office of the State Solicitor. Objective: to ensure the NEC policy submission receives legal correctness. Statutory requirements. Under Section 70, Major Projects, legal correctness is only obtained for major projects valuing above 10 million kina. All major projects are approved by the National Executive Council upon the NPC Board's recommendation in Step 11. Step 16. Legal clearance for major procurements. Statutory business paper. After NEC deliberates and awards the contract to a successful bidder, the NEC decision and draft contract agreement are forwarded to the Office of State Solicitor for legal clearance. Legal clearance is a legal advice issued by the State Solicitor confirming compliance with the mandatory procurement process and other relevant laws, and that all procuring documents are legally sufficient to execute the contract agreement. Objective: to ensure that the major draft contract agreement and NEC statutory business paper are cleared by the Office of State Solicitor in compliance with relevant laws. Legal clearance is obtained from the State Solicitor. Then the NEC statutory business paper or the NEC submission is prepared. Step 17. Major contract execution is the formal signing of the contract between the head of state (GG), the managing director or his or her delegate of the successful contractor, and witnessed by the procuring agency head for contracts valued more than 10 million kina. Objective: to ensure that the major contract agreement executed by the head of state governor-general is within the major procurement threshold limit. Personnel who execute the major contract agreement: head of state governor-general, managing director or his or her delegate of the successful contractor, and witnessed by the procuring agency head. Upon receipt of the legal clearance from the Office of the State Solicitor, the 6 major conformed contract agreement is prepared by NPC or the procuring agency and is furnished to NEC. NEC then liaises with the Office of the Head of State Governor-General to appoint a time, date, and venue for the major contract execution, and advises the successful contractor. To sum up, after the major contract agreement is executed or signed, the 6 original copies of the signed major contract agreements are furnished to the following stakeholders: the National Procurement Commission, the successful contractor, procuring agency, Office of the State Solicitor (OSS), Internal Revenue Commission (IRC), National Executive Council. Step 18. Contract implementation and management. After the contract signing, the contractor and the procuring agency will be required to implement the contract in a timely manner according to the work schedule as specified in the specific conditions of contract. Objective: to ensure that the procuring agency and the contractor implement the project successfully.